In 1933, the United States government made it a crime for ordinary citizens to own gold. In 2013, Cyprus seized money directly from people's bank accounts to save its financial system. In 2019, Lebanon locked citizens out of their own deposits while the currency lost 90% of its value. In Argentina, savings were frozen overnight. In every case, the pattern was the same. Governments reached into the pockets of their own people and took what they needed. And the people who lost everything were the ones who had trusted the system the most. But in every one of those collapses, there were people who survived. Not because they were lucky, because they held assets that government couldn't touch. To understand what those assets are, you first need to understand what governments can seize. And that list is longer than most people want to believe. Welcome to the financial system. Control the money, control the history. And remember, simple is never easy. Start with bank deposits. Most people treat their bank balance like a vault. It feels safe. It's insured. It has your name on it.
But legally, the moment you deposit money, it stops being yours. It becomes a loan you've made to the bank. You are an unsecured creditor. And in a crisis, the bank can decide or be ordered not to pay you back. Cyprus proved it, Lebanon proved it, Argentina proved it, the United States proved it in 1933. Deposit insurance exists to prevent panic, not to prevent loss. When the system truly breaks, insurance becomes a promise backed by the same institution that caused the problem in the first place. Next, consider digital assets held within the financial system. Stocks in a brokerage, bonds in a retirement account, pensions managed by the state. These are not in your hands. They are entries on someone else's ledger. And when governments need revenue or need to stop capital from fleeing, they can freeze accounts, impose withdrawal limits, restructure pensions, or tax holdings retroactively. Hungary seized private pension funds in 2010. Poland redirected pension assets to pay down government debt. Ireland raided its national pension reserve to bail out its banks. These aren't conspiracy theories. They are documented policy decisions made by democratic governments in modern times. Even your home isn't safe from the system. Property taxes mean you never truly own land. You rent it from the state. Stop paying, and eventually they take it. Eminent domain allows governments to seize property for public use. And in a debt crisis, mortgage holders can foreclose even if you've paid faithfully for years, if the terms change or the system restructures. In 2008, millions of Americans learned this the hard way. Homes repossessed, equity vanished, wealth transferred to the very institutions that created the crisis. So what's left? If they can freeze your bank account, seize your pension, tax your property, and rewrite the rules overnight, what exactly can't they touch? The answer begins with something ancient: physical gold and silver held outside the banking system. Not paper gold, not an ETF, not a certificate. Actual metal, in your hands, stored where no institution can reach it. For thousands of years, gold has outlived every currency, every empire, and every government that tried to replace it. When Rome debased the denarius, merchants fled to gold. When the French assignats became worthless in the 1790s, those who held gold or silver preserved their wealth while paper holders were ruined. When the Confederate dollar died, hard metal still bought food. When Lebanon's banks shut their doors, gold held in private hands retained its purchasing power, while digital balances became fictional numbers on frozen screens. Governments know this. That's exactly why Roosevelt outlawed gold ownership in 1933. He understood that gold outside the banking system was gold outside government control. And when you control the money supply, the last thing you want is citizens holding something you can't print, can't devalue, and can't confiscate without knocking on every door. But gold is only one category of what survives. The second is productive land, not as an investment on paper, but as a source of real output: food, timber, water, shelter.
After the Black Death swept Europe in the 14th century, killing nearly half the population, land became the most valuable asset on the continent. Not because its price went up on a market screen, but because it could produce something people needed to survive. Families with access to farmland didn't just endure the collapse. They rose through it. Peasants became landowners. Survivors with liquidity bought fields that lords could no longer staff. The same pattern repeated after 2008. Those with cash scooped up foreclosed properties while millions lost everything. Land held for production is not the same as land held for speculation. One feeds you, the other just sits on a ledger. The third untouchable asset is the one governments fear most because they can never confiscate it: knowledge and skills. In every financial collapse in history, the people who recovered fastest were not those with the biggest bank balances. They were the ones who could produce value when others could not. The baker who could still make bread. The craftsman who could still repair tools. The farmer who could still feed a community. The merchant who could still move goods across borders. These people didn't just survive collapses, they rose in them. Because in every crisis, money loses meaning, but production never does. People still need to eat, to build, to trade, to live, and the person who can meet those needs is never poor for long. No executive order can confiscate your ability to create. No bank freeze can take your trade. No currency collapse can erase what you know how to do. That's why skills are the ultimate crisis-proof asset. They can't be printed, they can't be debased, they can't be seized at the border. And unlike gold, they don't need to be hidden. They live inside you. The fourth untouchable asset is diversification beyond borders. History has shown over and over that those who kept assets in more than one country, more than one currency, more than one institution were the ones who maintained mobility when everyone else was paralyzed. During the 1997 Asian financial crisis, citizens across Southeast Asia watched their savings evaporate as local currencies collapsed. But those who held dollars or assets abroad survived far better than those who trusted only the local system. In Lebanon, the citizens who had diversified internationally before the crash kept their lives intact. Those who kept everything in Lebanese banks lost decades of careful work overnight. The pattern is always the same. Geographic concentration of wealth is a single point of failure, and when the failure comes, it comes fast. There's a fifth category that most people overlook: physical cash held outside the system. Not as a long-term store of value, cash loses purchasing power to inflation over time, but as a bridge. When banks freeze, when ATMs go dark, when digital payment systems shut down, physical cash becomes the only medium of exchange that still works. Argentina's citizens learned this during the corralito. Greeks learned it during the 2015 capital controls, when withdrawals were capped at €60 a day. The person with cash in hand had options. The person with cash trapped in a frozen account had none. Now, here's the uncomfortable truth that ties all of this together. The system is not designed to protect you. Deposit insurance, central bank guarantees, pension regulations, these are tools for managing panic, not preventing collapse. They exist to keep you calm long enough for the institutions to save themselves. And when the pressure becomes unbearable, the rules change. They always change. What was legal yesterday becomes illegal tomorrow. What was yours becomes theirs. The precedent has been set 100 times over on every continent in every century. So the real question is not whether governments will reach for your wealth again. They will. History has never once shown otherwise. The question is whether you'll be holding assets they can touch or assets they can't. Gold they can't print, land that produces, skills they can't confiscate, diversification they can't freeze, and the awareness to see the pattern before it repeats, because it always repeats. History doesn't repeat, but if you ignore it, it will crush you all the same. If this gave you a new perspective, hit subscribe. Its financial system and history leaves clues. I show you where the money leads.